Sure, Sumira, good afternoon. And see, from the medium-term perspective, if you look at something like TCS, we can clearly see the stock is in momentum. It's from the large cap space, and it is now showing a very strong trend as well. And over the period of long run, also, if you look at something like this stock has never been an underperformer. It has always given returns to its investors, and I think TCS can be a very good pick over here. Currently, it's around 3950, and over the period of next 1 year, we expect at least it should be up by nearly around 30% from current levels also. So TCS can be one of the stocks you can keep an eye on. The next stock can be Titan. We can clearly see that post-pandemic there was some correction in Titan, but it was more like a time correction. And after that, we can clearly see it picking up big time. So even before everything has opened up, Titan is already touching new highs, and I think it is going to be the story for the coming 2 or 3 years as well. So Titan can be another stock pick that one can keep an eye on, and along with that, maybe Berger Paint can also be a very good pick. So these are the three stocks I would ask him to probably invest his 2 lakhs and divide it equally across these three stocks.
Okay.
Recommend that Amara Raja Battery has been continued to be an underperformer in the auto space, but over lately we can see some kind of a positive traction coming out of it. And I think next 1 or 2 years, auto ancillary should continue to do well, and that includes Amara Raja Battery as well. So even though we saw some kind of a short-term correction, I think eventually the stock should outperform. So one can hold on to Amara Raja Battery. Over short term, the stop loss can be 710, expecting a target of 800, and eventually that should also be taken out. With respect to Berger Paints, again, as I said, it is one of a very classic stock pick from the short term to long term investment as well. And we can clearly see, despite of the input raw material cost going up, Berger Paints has continued to do stellar returns to its investors. It has already near its lifetime high levels. I think the stock should outperform eventually. One can continue to hold on to Berger Paints, keeping a stop loss of 810 for the target of 890, and eventually the stock should move higher, and I think it should cross 1000 rupees as well. And as far as Pidilite again goes, a very classic stock. If you look at the 10-year chart, not only just past 1 year, from the 10 years perspective, the stock has been in a secular bull trend. There were short-term corrections we saw, but use that as a classic buying opportunity. So if you want to invest into Pidilite or use any dips as buying opportunity, and if you're already there, then use a stop loss of 2-300, expecting a target of 2700 and possibly much higher. So these stocks are looking very promising. With Amar Raja might take some time to outperform, but Berger Paints and Pidilite should continue to do that over short run also.
Okay, so
as far as NMDC is concerned, the stock has been underperforming for quite some time. We can clearly see it made a top around 210 in May last, and then since around 4 months, it has not done anything, but has gone down from 210 to 152. So in this, when the overall commodity space is outperforming and the metal stocks like Tata Steel is doing much better, my recommendation would be better to be out from NMDC and diversify or invest into Tata Steel. That looks much more promising and outperforming stock. And over the period of 6 months or 1 year, I think Tata Steel will outperform NMDC as well. So it's better to be out at the current levels 152. It's just consolidating, and if it breaks that level of 148 again, then there can be another set of sell-off which we can see in NMDC. So it's better to be out from here and get into Tata Steel. And as far as DLF is concerned, I think the overall sector has been in a very strong uptrend. There has been a bull trend in the real estate space. You can look at DLF, you can look at iBull Realty, and you can look at a lot of other stocks that has going secularly on the upside. So DLF should continue to do well eventually, and one can continue to hold on to positions here. Maintain a stop loss of 325 for the target of 375 over short term, and if possible, the time horizon can be extended to at least a year's time from now on. I think DLF can give much better returns going forward. So hold on to DLF and be out from NMDC. Possibly Tata still looks promising.
Okay. Current strategy, Ashish?
See, Gland Pharma, overall pharma space has been consolidating, to be honest, but Gland Pharma has outperformed even the pharma index if you look at the overall stock performance. And that indicates a very important thing. This is known as a relative outperformance from a stock. And if you do a ratio analysis of Gland Pharma versus the pharma index, I think the stock should continue to do that. So very good pick. I would suggest that he is holding on to the stock here. Over short term, maintain a stop loss of 3,700. expecting a target of 4,400 on the upside. And if the time horizon is for 6 months or more, I think we can even cross that 5,000 mark. So hold on to the stock. Looks promising to me.
Bye, gentlemen.